How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about the markets, breaking down what happened today in the S&P, the Dow, and the NASDAQ, and I also want to share with you guys what I personally did in the markets today, as well as a bunch of stocks and a bunch of ETFs that I'm watching and that I'm looking to trade right now in the middle of April in 2020. And some of these stocks are actually ones that have been hit very hard by the CV, by the global crisis that we're experiencing right now. And I want to go over with you guys what these stocks are and whether or not I see a lot of potential in them over these next couple of months as the economy's reopening, or maybe they might not have as much potential as many people do think. So if you guys enjoy this video, hit that like button for me, consider subscribing, and also feel free to join our Discord chat and our Facebook group linked down below in the description box. Those are 100% free of charge to join. So let's get into it, starting off with the S&P 500, which ended up going up 75 points today, up roughly 2.7%. And if you guys were paying attention to the markets after hours yesterday, the S&P, if we take a look at SPY here, which is simply an ETF that tracks the S&P, SPY was up immensely after hours yesterday, which kind of gave everybody the idea that, yeah, the markets are most likely going to be green heading into today. And why did the market spike up yesterday? Well, we got news from Gilead, I think that's how you pronounce the company's name, that they're making a lot of progress on the CV drug at this point. And honestly, the market is very reactive to good news like that. And we also saw a pop, honestly, in my opinion, because of the three-step plan to reopen the economy in places such as Texas, opening parks, Florida, they're opening beaches, I believe. I don't know if it's across the whole state, but they are opening beaches there to the public. So as things are starting to relax in certain areas, we are seeing this spike in the market, and certain areas that are more dense with the CV, dense population like New York. We saw the governor of New York say he's making the restrictions tight up until May 15th. And here in Jersey where I am, I'm sure it's going to be very similar, since we do have the most cases, if not the second most at this point. I haven't really been keeping an eye on that, but in certain places, it's going to be more relaxed, and that's kind of why we are seeing this overall spike up in the market, as well as the drug from Gilead. And again, I hope that's how I pronounce, or that's how you pronounce that company's name. And if we take a look at it very quickly, the ticker is GILD. It was up from $75-ish at the close yesterday. It popped up almost to $90 after hours. It sold off to about 81 as it cooled off here, and then ultimately it popped up to about $84 at the close, ending the day up on a nice 10% swing. And before we do get deeper into the Dow, actually, no, let's just say what happened to the Dow and the NASDAQ really quickly. Then I'll go over with you guys what is this three-step plan, and then we'll talk about what I did and the stocks that could do very well here, or maybe not, as the economy reopens. So the NASDAQ today, guys, surprisingly didn't do as well as the S&P. The NASDAQ was actually up not even 1%, up 0.85%, up about $75 on the close. And why? Well, you can see some of the big tech giants were down. Netflix down 16 points today, Amazon down about 33 points, Apple down almost $4. So the tech beasts are weighing down the NASDAQ, as it is a tech-heavy index. And overall, guys, despite that, the uptrend is still intact here on the NASDAQ. Same exact thing with the S&P 500, with the S&P actually being at this point at a very critical level, roughly at 2870, and under this 180 SMA on the 4-hour chart. And from a bearish perspective, this is where I'm looking to see if the bears pop in, right? And at this point, you guys know I'm not a huge bull. I'm not a huge bear. I'm just simply trading the technicals when it comes to my short-term trading, and longer investing at this point. I'm not really buying at this point in time due to the markets are rallying up immensely over these past couple of weeks. But soon as if the markets pop back down to 2,000 on the S&P, that is where I'd probably buy some more long-term positions. But as of now, I'm not a crazy bull, crazy bear. I'm just trading the trend. And I would, again, look at about 2,900 to see what happens with the S&P there. If we see a trend reversal or if we break right through that, that would obviously be great for the bulls. And when it comes to the Dow had a pretty solid day, up almost 3% exactly, up 705 points on the day, closing right around that resistance that we talked about yesterday and in the previous couple of videos at 24,200. So the markets, they did pretty well today, very well. A lot of green across, but the major cap stocks like Apple, Amazon, Netflix, they didn't do well today, but it doesn't really matter because they've been crushing it over the past couple of days. So one red day, it's not really that bad, to be honest, for those stocks at least. And when it comes to this 3-step plan, guys, let's go over it very quickly as I'm pulling up my notes here. So in phase 1, the plan recommends strict social distancing for all people in public. Gatherings larger than 10 people are to be avoided. And the point of this phase 1, phase 2, phase 3 is kind of to ease the economy back into opening. They don't want to just be like, all right, the gates are open, no more social distancing, nothing, because obviously that's going to cause more spread and more harm to the economy and more harm to a lot more people in the world, which is what we do not want. And in phase 2, people are encouraged to maximize social distancing and limit gatherings to no more than 50 people unless precautionary measures are taken. Travel could resume. And in phase 3, envisions a return to normalcy for most Americans with a focus on identification and isolation of any new infections. So phase 3, guys, it's not going to come for a couple of months here in many different states. As again, like I said earlier, states such as New Jersey, New York, and many others are still going to be strict for a couple more weeks here at least, due to them seeing a lot of cases. But places that are not seeing a lot of cases, they might relax, which at this point, that could help some small businesses, larger businesses in those areas, which in turn could help the economy a bit here. But until we get, obviously, the whole country back and rolling, there's going to be a lot more pain when it comes to the economy, in my personal opinion. And let me take a sip of water here, guys, because I'm about to choke. So let's talk about now what I personally did in the market today. And today, guys, was not a good day for me. I did not end off the week strong. I actually ended off the week with a red day. And I was personally trading natural gas today, and we got news yesterday of a production cut in natural gas, and this sent the price flying. I'm talking flying, guys. If you were watching UGAS yesterday, you saw natural gas, and UGAS was just on fire. UGAS was up like 20% or something, and my thesis here was I kind of wanted to, short the rally, short the news, kind of sell the news, or that's kind of the strategy that I approached here. And overall, the thesis of the strategy was correct because we did see a decline in natural gas, but my timing was not. I kind of got into degas, which goes up whenever natural gas goes down, at the wrong time. So I was planning on kind of shorting natural gas by playing DGAS. And for me, guys, I got into DGAS at $244. I got it in at the absolute wrong time. I believe it might have been on this pop here. And you guys can see we did not continue the pop there as I expected due to the trend of natural gas at about 1 p.m. If you guys take a look at it very quickly, /NG, natural gas at about 1 p.m., we started to not dump. I thought it was going to dump further, but we popped up, which in turn made me lose money on DGAS. And at that point, I didn't take any trades prior to that. I was taking it slow like I do pretty much every Friday because I don't like forcing things on Friday, especially if I'm green from the previous couple of sessions in the week, which in this case I was, right? But again, it went against me. 244 is where I got in, and I lost a pretty sizable position here because I didn't get out quick enough because I had a mental stop loss. And this is kind of where, if you're not quick with your mental stop loss, you can lose a bit more than expected, and this was one of those cases. I lost about like 4% on the trade, 3 to 4% on the trade. Nothing too crazy, but at that point, I cut the computer off, and just stopped for the day, just because again I didn't want to force anything and make the red Friday I had even worse. So overall, that is what I did today. I'd love to know in the comments your thoughts, what you guys have been doing. Now let's talk about stocks that could rebound pretty heavily, or maybe not, as the economy reopens. And a lot of these stocks, guys, are ones that we have been following. They're the hotel stocks, the cruise line stocks, and the restaurant stocks. These are companies, and the movie theater stocks. These are companies that have been crushed. Let's start out with some movie theater stocks. And obviously, these are companies, guys, I forget, I saw a stat that a movie theater company only made like $5,000 or something, and in the previous period it made millions. Their sales have been crushed, guys. AMC was a $17 stock a year ago. Now it bottomed at about $1.95, and today it was up 31%. So you're going to see some of these stocks here as the news of economic reopening sweeps across America. You're going to see some of these stocks react. So we saw AMC pop today. And again, guys, these are companies that are literally not operating. This was at 405 earlier, which at that point, it must have been up about 40-50%, which is incredible. CNK is a company called Cinemark, another movie theater company, up 16% today. IMAX, another company here, up 9% today. And casino stocks have also been hit very aggressively. Wynn Resorts has been crushed, right? But today it was up a nice 8%. You saw yesterday it was at $71, popped to about $80 after hours, which was incredible. So you're going to see a lot of stocks moving up. HLT, Hilton, a hotel company, up 8%. The Marriott, MAR, up 5% today. CCL, RCL, these are cruise line stocks. CCL up 6%. RCL was up, 10% today. And even a company like Uber, I think, could potentially pop as the economy starts to reopen, because let's be honest, people aren't Ubering places right now because there's not many places to go, as a lot of places are shut down. So at this point, guys, you have to realize, and this is kind of my 2 cents with these companies, are they going to rebound as aggressively as people think? I personally don't think so. That's just me being honest. Going back to AMC, is this stock just going to go back up to $15 or, back to $7 where it was before this crisis in the snap of a finger? I personally don't think so, because you have to realize the price of the stock right now is reflecting what the revenue, what the business is producing. And that's obviously not much at this point. And as the economy is reopening, things are slowly starting to get back to business. are humans, you have to realize this, are humans going to be rushing back to a movie theater where who knows if this seat's been clean or the floor's been clean and wanting to go around many people? Are humans going to be doing that? I personally don't think so. And the second quarter is going to be terrible for AMC. The third quarter is going to be terrible for AMC and many of these companies because people are going to be slow getting back to these places if they are at all. I know there's many people that won't be going to a movie theater for another year. So the recovery is going to be a lot slower. It's not like the economy is going to reopen and the stock's just going to fly back up to where it was before this crisis, because where it was before the crisis, there was a lot more revenue coming in. So the price in many of these companies, they're just pricing kind of what the business is at right now, which again, it's not that much. So in my opinion, is there long-term potential in some of these companies, again, like the hotels, the airline, even the airlines, right? These restaurant stocks, yes, there is potential, but the recovery is not going to be 1 quarter away. I think the recovery is going to take at least 1 year. I mean, more than that at this point. At least a year and a half, 2 years, 3 years before these companies get back to the point where they're up and rolling again in terms of making solid money or making close to what the money was that they were making before, right? It's going to take time. And of course, in different industries, it's going to be different. I'm kind of generalizing here, but you guys do know what I mean. And when it comes to, stocks that I'm looking to buy, the truth is I'm not looking to dive into these quite yet. I'm looking at them more as a trade at this point, but either way, they're worth watching as the economy is slowly reopening here. And we got some interesting news from a lot of other companies today. Boeing was up a lot, up $20 per share here, up 15% today because they announced they're going to begin ramping their commercial aircraft production again in the Seattle area starting next week after temporarily shutting the production late last month. So this is very good news here for Boeing, sending the stock up about 15%. We also got a good catalyst from Procter & Gamble, and another reason why I absolutely love having a company like this in my portfolio. We got news that organic sales rose around 6% as people panic bought many of their products. And I know that might not be the most ethical thing, saying that, profiting off a pandemic. I'm not about that in any means, but, seeing that in a company makes you realize how strong of a company it could be during rough times. And let's be honest, as an investor, this is something critical that you'd want to see in a company that you invest in. You want to see whether or not it could weather the storm, whether or not they have essential products people need whenever. This is what I personally look for in long-term companies, cash flow companies, blue chip companies that I like to invest in and that I'm looking to grab dividends from. That's very, very key in my opinion. And some other stocks that did absolutely incredible today. Shopify, I didn't even expect this. Up another 12%. Absolutely insane. Up $64 per share. And at this point, I don't even know where this is going to pull back to, because we talked about $500 pullback. That didn't happen. Now we're at almost $600. So maybe a pull down to maybe $560, $570, maybe back to $540, $550. That could be a spot here on Shopify. But either way, I don't want to chase this at this point. I'm going to let it cool off and make my decision from there. And another one that did quite well today was Square, ticker symbol SQ. This one roughly up 7% today, up about $3.77. And we've talked about it on the channel. I'm looking to trade it between $60 here and $65. So in this upcoming week, if we hold that 61 level, this could be a nice entry point for Square. And overall, guys, that's pretty much it. I went over everything that I wanted to go over. And before we wrap up the video, actually, there is one thing I forgot to mention. Let's talk about kind of a quick note here that stocks today did very well in the US, and they also did very well in Europe and the Asian markets. But we got some negative news from China, and it's kind of odd. The markets did well in Asia and Europe, but we got news from China that their economic output fell by 6.8% in the first quarter due to the CV problem that we're experiencing, marking the first quarterly economic contraction the country has posted since official records began. So we're seeing a contraction there in China, and I'll leave it at that. I'll let you guys just ponder that thought, and let me know what you have to think about that. Anything down below in the comment section, as well as the markets in general here in the U.S., individual stocks you're trading, watching, I'd love to know. And if you guys enjoyed the video, hit that like button for me, consider subscribing, and feel free to claim, I almost forgot the word, to claim your 2 free stocks from Webull, valued up to $1,400. Those are linked down below in the description box. All you have to do is deposit $100 and you get your 2 free stocks, and that does support me directly for all the free content that I'm putting up here on the channel. And I do appreciate you guys if you do end up using that affiliate link. And again, it is down below in the description box. So I'll catch you all in the next video. Hope you all did well this week. Have a great weekend. Stay safe out there. As always, peace out, guys.